kind of, or what level of grant funding probably did you receive? And since now we're seeing it's going to probably dwindle or disappear, what are your plans?
Right. Yeah, thank you very much. I'm Gatwiri Njogu Mokaya. I'm a CEO and co-founder of VunaPay. At VunaPay, we work with smallholder farmers, digitizing we really digitize agri-cooperatives. And the reason we do that is because we want to shed a light on who that smallholder farmer is. Because we came to realize that people are not funding smallholder farmers because they're poor. It's just because, to quote someone, what someone told me, they're a black hole. They don't know who that smallholder farmer is. They don't know what they grow. They don't know how the money flows for them. They don't know what their production last year was. They don't know anything about that smallholder farmer. So at VunaPay, we digitize agri-cooperatives. We digitize about 230 across Kenya, serving hundreds of thousands of farmers. And we began by solving the problem that I say it was a house that was burning, and that is delayed payment. If you know smallholder farmers, they generally will sell through their agri-cooperatives, but the cooperative is me, you, and 1,000 of us, meaning there's no one to pay you up front. Whatever you brought, whether it's your coffee, your milk, it has to be processed and then sold, and then that's when finally you get paid. Which means for dairy, they're lucky it's only a month. But for coffee, it takes 6 months. I've even seen 13 months in some regions before a farmer can be paid. I don't know how many of us here can wait for your salary for 13 months. But for some reason, we all expect a smallholder farmer to wait. Now, once we solved that problem, but we are still in the process of solving, and I'll explain why, we realized, okay, now that the hungry man has some food, we do not want them to stay at zero. We want to make sure that they grow, and so now what we do is actually use that platform, that infrastructure at the cooperative to link them to different services. We have other agri-techs providing services like soil testing. We have farm inputs. We have insurance, all of them running on our platform. Now, to your question, yes, we provide lending. The instant payment is lending. We provide working capital, asset financing. But we are only, I think I would say we are only meeting about 10% of the need right now. And that's because, yes, I'm hearing there's a lot of money. And that's good to hear that there's a lot of money. But it's not structured in a way that smallholders, or those of us who are lending to the smallholders, can easily access it. Sometimes you will find, like we were having a conversation with Mombeki before here, I'm looking for $1 million, $2 million, at most 3, 4. For him, his ticket size starts at $10 million, and they're not going to look anywhere below that, you know? And many times we have partnerships, like we have one of the big tier 1 banks that's one of our lending partners. We have some DFIs that have also supported us. We do have some grants. We actually even have a partnership with Corps AgriFin. But what we find is that, first of all, the one that can allow us to scale, of course, will be more the private capital. And first, it takes extremely long. If you're a bank, before they finally can finance that cooperative or those farmers, the season has ended. And we are now beginning conversations for the next season, so they don't move as fast as we'd like them to move. And then the money from grants is fantastic, but we know we cannot rely on grants. We still work with it as though it is commercial capital that has come on board, but it's still not sufficient. We need to find ways for us not to have to be the ones lending. I know we had this conversation earlier. For me, my dream is not to be lending these farmers on my balance sheets. Because like he said, fintechs or agri-techs, we actually don't have capital. We don't go and buy all this land and say, I'm going to take this 10,000 acres of land to KCB for them to give me a loan to be able to lend the farmer. So that's where I believe public money can really help us, you know. First of all, by guaranteeing, you know, you come in and you say, okay, we're going to guarantee VunaPay So when, say, KCB wants to lend, they know it's already guaranteed, and they can lend us quickly, and they're not asking us for title deeds. Yeah. Secondly, you can just provide, I mean, the government, I know government plays a very big role in especially policy. You know, making sure, and we had this conversation again, we actually began our panel just before this, that we set standards that when VUNAPE gives this, provides, you know, these different loans that smallholder farmers want, we have already met a set criteria. So if KCB or Equity Bank or any other bank want to lend them, there's already that standard that they know that who VUNAPE has brought on board is actually bankable because you set specific criteria. So that has been our journey for fundraising. We are not meeting the need. The need is there. The need is huge because we see the big difference that happens once a farmer has gotten that extra cow, or once they've gotten their animal feeds, or when they get their fertilizers, and we actually measure the yield, and you see it's increasing. But then 10% of our farmers, that is a shame.
For emerging markets, we started with Africa, and right now we've expanded to other emerging markets like Latin America. We are right now providing data in South Asia, Southeast Asia. And one of the initiatives that we have as a company, together with Corps AgriFin, is we have created the AgBase platform. And basically what AgBase does is to also provide that intelligence for the AgTech innovation ecosystem. And so in year one of the program, we were focusing on Africa, highlighting the ecosystem in Africa, showing the startups, who are the investors in the startups, and all that. And over the years, we are in the third year of the program, and right now we have expanded to other regions like Southeast Asia, South Asia as well. And so basically for us, the intelligence that we have is, if you are an innovator in a particular space, you are able to then, through our platform, you're able to see who are the investors. In case you are looking for funding, you're able to see who are the investors who are investing in startups in your area of interest. If you are an investor or a funder, you're able to then see what are the startups that other investors of your similar profile are investing in. And also, if you are just an ecosystem player, you are able to see how the ecosystem is looking like, where are the gaps in the ecosystem, and how generally is the funding landscape in the ecosystem looking like. Yeah.
Are there any initial insights that you can share with the audience in terms of how investment has been flowing, or a key highlight that you can share with them so far?
Yeah, so in terms of funding, what we've been seeing, especially the last 10 years, is funding in Africa has actually been growing, though after 2022 period where we had a peak, and this peak was actually mirrored globally, where there was a lot of funding going into startups and all that. But after then, we've seen funding into the space stabilizing around the 200 million mark every year. So like 2025, total funding in Africa was around 170 million. And this is mostly concentrated in key markets like Kenya, Nigeria, South Africa, Egypt. But we've also been seeing activities in other markets like Ghana, Cote d'Ivoire, and all that. So, and also the other trend we've been seeing is Africa is largely depending on grants in terms of funding in this space, compared to other emerging markets like South Asia and Latin America. Almost 60% of our deals are grants, and most of them are smaller ticket sizes. So I think that is the other trend we are seeing. And then the other thing we've been seeing is equity funding has also been slowing down a little bit from the 2022 highs. So right now, equity, for 2025 data, equity accounted for actually less than half of the funding. And that is not something that we were seeing in the previous years. So that is the other trend. And then the other trend is around also how, in terms of inclusion, we are seeing more women-founded startups actually also, they're actually depending on grants more compared to the other startups, either that mixed gender founded or male founders. So I think it's like a structural gap that we're also seeing in that space as well. Yep.
Thank you. It's a good thing that you have alluded to the type of funding. And we have Mombeki here who basically thinks through on how funds can flow within the cultural ecosystem and to help the investment space. So I'll let Mombeki introduce himself and what he does. And as you're doing that, probably also kind of build on and react to some of the sentiments that have been brought about by Josh.
Thank you, Collins. Good afternoon already, yeah? Good afternoon, everyone. As mentioned, my name is Mombeki Baregu. I am an investment officer for the International Finance Corporation, IFC, otherwise known as. The IFC is the private sector wing of the World Bank. So we are part and parcel of the World Bank, but we focus on the private sector, whereas our counterparts focus on the public sector. So just in the context of agriculture and climate, the World Bank has been, overall, let me just start, the World Bank is now really focused on jobs. So jobs is the main outcome of all our programs right now. So that's point number one. And also, we also focused on agriculture or rural jobs as well. So you may have seen recently there was a launch of what's called an AgriConnect Compact, the Kenyan National AgriConnect Compact. That links to a program that the World Bank is supporting, but hopefully will also be supported by other public donors, such as, or public multilaterals, such as the African Development Bank and others. And also, but there's a huge private sector component as well. So just a bit on that, because I think it's important, at least within the context of Africa and what we're discussing here. So within the Kenyan Compact, the public commitments to transforming the agriculture sector is about $3 billion, essentially $3.8 billion, which is quite huge, yeah? But the expectation from that compact is that the private sector will also mobilize $7.6 billion. This is over a 10-year period, so it's not something that will happen in 1 or 2 years. But I think that's quite critical. And some of the things I'll speak to is some of the thinking that we're thinking that will potentially be done through this AgriConnect initiative, which of course will be driven by the government of Kenya and which we will support. So in a nutshell, and also to get back to what the question that Colin asked, there's momentum to come and support agriculture. And of course, the amounts are huge. The challenge will be how do we get the amounts flowing? So I think, as said there, and what Britta is seeing as the trends, I think the narrative that has been flowing over a year now is money is not the issue. A lot of these investor circles, public and private, they'll tell you money is not the problem. And I think now even generally, even though you said a lot of reliance on donors, I think even the African Development Bank is saying there's $4 trillion worth of available capital in Africa. What we struggle is how to get that capital to the right sector. So the narrative that people maybe may depend on donor funding for their own interest, or maybe they feel it's the easiest way to go, but it's not that the money is not available within Africa, within African companies and governments. So money, let's take that away. Money is not the problem. So what is the problem? Even us, we have the money and we were trying to get money there. So there are two areas that I think are important. First, from the side of the money. This getting money into agriculture and agtechs and getting them to work effectively is something that our systems are still struggling with. I know we have VunaPay here, and I've spoken to other agtechs. usually I think now not to go into too much detail, but usually from whether it's a fintech or an agtech, usually their assets are quite thin. So they don't own properties, they're not gonna own trucks, they don't have many assets. It's usually just founders with ideas, and maybe they do great programming and they've been able to develop something on software. But to be banked, whether it's whoever the investor may be, particularly if they have a private interest, they want to see assets. What asset do you own? I think we can't avoid that. That's usually a big challenge for most agtechs. But I think agtechs have done a good job of understanding some of these markets, offering solutions. So what is needed is a way that agtechs can be gateways, in my view, to finance and other technologies without necessarily having to start building huge assets, because it's another challenge. And that is, and Vunapay can speak about how they're trying to do this and working with different financial institutions. But I think we've seen the agtechs trying to work with different financial institutions, but even that has its limitations. So I think what we need to do, and potentially one of the things we can think about this program that we're building from the AgriConnect Compact, is enabling environment that allows transactions between the agtechs, these service providers, and the financial institutions, that allows to scale of certain services. I think what's critical is the services, not necessarily the scaling of the companies, because these are two different things, right? If you're trying to scale companies, you look at how many deals were done per year, the size of the deals, not how much was enabled within the agriculture ecosystem. You get me, right? So even banks, there are a lot of the working capital is like revolving funding. It's used at amount, but you just keep revolving it. So how do we plug in agtechs and others into this revolving funding environment? I think that's the one question. In the context of climate, I think that it's also, we need to think about how we can potentially change our business models. Climate also requires some level of assets. So this is different from a typical agtech, because agtechs usually don't have assets. It's usually just a solution that's tech-driven, and they hope that will be enough to put them in business and keep them in business. But if you want to also address climate, it's going to take more than just the software. You're going to have some hardware on the ground. These may be irrigation equipment or cooling equipment or some sort of low carbon equipment that can be used by the agriculture sector and the stakeholders. To do that effectively and to offer this effectively, it cannot be, and what is happening now is that for climate solutions, we're trying to push it on the farmer. Maybe the farmer to have some irrigation equipment, maybe for the farmer to have some sort of storage or some other solution. I think the business model that we can start exploring more and see how it can be funded is maybe these services, rather than the asset, let's say irrigation as a service. I think this is a still novel thing, but I'm trying to learn more, and I would like to hear how this can be scaled. But irrigation as a service, cooling as a service. We already know mechanization is offered as a service through platforms like Hello Tractor. So you don't have to have a tractor, you can lease. But then how can this be funded on a credit basis? Because you still need money to access that. So I think from the climate is how we pivot from the more traditional business models to more innovative models. But these models will still require acquisition of assets, and who do we bring into that picture as well? So let me stop there as far as what we're doing, but also the areas that we would like to see grow, and we would like, potentially, will be interested to support as well. Hopefully that answered.
So thank you so much for this opportunity. Thank you also for you listening in and giving a voice to the farmers. I want to ask the financiers to be comfortable with the small-scale farmers. It is where the strength is. It's the mosaic of enterprise. Why are you not comfortable? We are de-risking. We don't want to put our eggs in one basket, because out of the same 1 acre, you can get so many enterprises running, and we'll be able to pay you your loan. Just don't increase the cost of lending. don't put the interest rate so high, we'll be able to pay you because the farms are sure and they will be there. On the aspect of sales, we have targets on, we have to raise our own revenue. So each county has their own target. I am friendly, but yes, I still want my sales so that we are able to pay and meet our cost of, expenditures of what we have. So we may harmonize, but still, that sales is needed. If the farmer would want their son or daughter to be employed, where will the funding come from? It's from the same. So it's an aspect of only making cost of production a bit lower so that they're able to pay the cess. So even that is quite necessary so that we are able to move forward together. So the whole thing revolves on money. So we want to see how we can raise the money maybe on weekly basis, daily basis, monthly basis, half year. And when I say half year, if it is the sale of goods or the cow itself, full year, those are budget points or money points that we can collect and make the farmer more comfortable and make the farming enterprise quite attractive to people to venture in. Thank you very much.